You are now listening to About That Business, hosted by Rom Wills. Rom Wills is an entrepreneur and personal coach who has helped people reach their fullest potential personally and professionally. Take it away, Rom.
Welcome to Rom Wills About That Business. Tax payments, part 2. I had to do a part 2 because I finally finished my taxes, got all my forms and everything. And I'm like, damn, I need more kids. I need more. Oh my God. I need, you know what? All those loose kids I got out here, I need to start claiming them. Because I know some of y'all think I got about a ton of kids. Oh, wait, this ain't the relationship channel. All right. But still, I was like, shit, I need to go out and just adopt some kids or something. Like, he say, see some child, say, hey, you want to be my child? Oh man, you know, for all the tax cuts, I'm like, damn. My first thought was, why am I paying more than I paid last year? Then my second thought was, because you made more money, dummy. Which is cool. And you know what? I'm gonna tell you what. I'm not complaining about paying the tax, right? And this you'll find this podcast ain't about that. Yeah, I'm actually honored to have to pay it because that means I'm doing well, right? But then this is the main thing. You know, all the jokes aside and everything. If you in business for yourself, and unless like say you working for like if you're working for somebody as an independent contractor, usually they'll give you 1099 miscellaneous, or if you're doing stuff online, a 1099K, right? And how much you get there depends on every company has a threshold where they'll send out one. Usually, like if you're under that threshold, they ain't gonna send it to you. Now, technically, I'd be remiss if I don't say this. Technically, every little bit of money you make, you technically supposed to claim on your taxes. Even if you sell something at a yard sale, technically you're supposed to claim it. But IRS, they ain't crazy because they trying to catch everybody's little bit of money. But if it's a lump sum, you probably need to claim it. Trust me, they will find a lump sum. $200, they probably be like, whatever. $200,000, oh yeah, they'll find your ass. But anyway, right? Tax payments. Now, usually you're not going to be in a situation where they take it out. You know, if you want a job, they taking it out for that FICA fella and Social Security and all of that. Cool. You don't even have to think about it, right? But if you self-employed, understand you will be paying. You will be paying. And just admit, look at it like this. Instead of paying like, you know, that Social Security, FICA and all of that in one blow, you just in several like paychecks, you know, 52 paychecks, 26, however you paid 12, however you paid a month, right? Understand that if you self-employed, you paying all that in one lump sum. So one of the habits that you need to develop is saving money. Now, you already should be saving money for emergencies anyway, but you also saving it for taxes because you're going to pay it. You're going to pay it. And depending on the situation, some of that savings all of it might go to taxes, right? Now, here's something with that. Just as an aside, the IRS, anyway, they allow you to pay in installments as long as you put down a down payment, and you might have to do that. But the thing is, the practice that you want to do is get in the habit of saving. I would say, now I've read one person who's self-employed, they say it maybe save 40%. That's kind of tough. That can be tough. But you want to save, I would say save, if you can save 20%, like whatever you get, like say you do something, you get a payment of $1,000. Like take $200 off the top and just put that away. That's taxes, right? You know, if you get a payment of $10, right? $2 off the top, whatever. Just go by the percentage. If you can save more, that's actually preferable, but probably a minimum of 20% off of each payment, right? 20%. Now that does two things. One, when it adds up at the end of the year and tax season comes, you should be able to pay your taxes, right? Especially if you're writing off stuff, like keeping all your receipts and everything. In fact, I'm gonna talk about that in my next one, the receipts part. But you should be able to pay it, or at least put a down payment, but supposedly pay it. If you independent too, and also too, if you got that extra money, it's not going towards business and everything. Why be careful about spending like frivolous money, right? Especially if you're self-employed, because they can always hit you with something that you ain't thinking about, right? Wait, hold on for a second. All right, yeah, back. So you definitely want to save. I'm saying minimum 20%. If you can go up to 40%, fine. But try to save something, because you're going to pay the piper, and that's just a price of doing business. Now, to mitigate those costs, I'll talk about that in the next podcast. But it's coming. And also too, for the tax payments, I highly recommend. Usually, if you're getting 1099s and stuff like that, they have to have them to you at least postmarked on the 31st of January, right? Doing your taxes early as possible. That way, if you do have to make payments and you might not have the money right then, like all of the money. Now, yeah, you can still go on a payment plan, but since you do have to April 15th, that gives you some time to make some money in case you need to. Like, say hypothetically, you need to pay $5,000, but your savings is only $1,000. Hey, no judgment here. It's tough, right? So you gotta make $4,000 more, right? It gives you some time. So at least have all the paperwork. Then you know what you need to do, right? The only time, and really, that's why a lot of businesses they ain't gonna file them early anyway, right? They taking their time, especially some small businesses. In fact, the only time really you should file them as early as possible is if you're getting money back. But I'm gonna tell you what, as a self-employed person, don't expect that unless your business is like a side business and that you had a full-time job that was taking out regular tax and stuff. And once again, I'll get into the receipts part in another podcast, right? But if you want to pay that, you don't really need to pay it early unless you're getting money back, and you're usually not. But yeah, save that money. Save that money, okay? All right? So anyway, because you're going to have to do it. So anyway, that's all I got for now. Get back with y'all later. Peace and many blessings. Oh, I'm getting my endings confused. Let's go make that money.